So today we will be doing preparation of cash book under the GST topic, goods and services topic. So look at the question. We are doing illustration number 7 of the TS Grewal book, page number 12.30. Prepare 2-column cash book of Tarun of Kanpur and also journal entries from the following transactions. So we are preparing the cash book and we also have to prepare the journal format and pass the journal entries for those which will not come in the cash book. And it is 2-column cash book. 2-column cash book, also known as double column cash book, where we prepare 2 columns, one for the cash, other for the bank transaction. So now first let's prepare the format of the cash book. Prepare the format, everybody. So we would have the date, particulars, ledger folio column, cash column and bank column. Same would be repeated: date, particulars, ledger folio, cash column, bank. Prepare that. Once you are ready with the format, please say done. In the books of Tarun of Kanpur. We are preparing the cash book. Dear CR, date, particulars, ledger folio, cash rupees, bank rupees. Same repeated on the credit side. Shall we start? Okay, look at the question. 2022, April 1st. Cash in hand 1200, overdraft at bank 15,000. Cash in hand is a debit balance. So 2022, April 1st on the debit side you write to balance brought down. In the cash column, 1200. But the bank balance is an overdraft, which means it is on the credit side that we would write April 1st by balance brought down 15,000 in the bank column. Next transaction is April 3rd. Capital introduced 20,000. So when capital is introduced, we credit the capital. How is it introduced? Out of which 16,000 is by check from his savings account. So what is happening is a check is being received to worth of 16,000. Out of 20,000, check of 16,000. So balance we'll assume has been given as cash. So if you see, the transaction would be cash account debit 4,000, bank account debit 16,000 to capital. So it would be on the debit side here. April 3rd, you will have to capital account. Cash of 4,000 and the check we would be depositing in the bank. So bank balance would increase by 16,000. Next is on April 4th. Purchase goods from Shyam Traders Lucknow for 3,000 plus CGST, SGST at the rate of 6% each, and they allowed trade discount 200. The amount was paid by check. Now, this is a case of purchase. What is the value of the purchase? 3,000 is the value, but from that we have to always remove the trade discount. Trade discount is never recorded in the books. So out of 3,200 gone, the value of purchase is 2,800. So purchases account debit would be how much? 2,800. And then there is CGST and SGST which we have to calculate on that 2,800 at the rate of 6%. So calculating 2,800 into 6%. So I am writing it here. List price was 3,000 less trade discount was 200. So 2,800 was the taxable value. Now on this we have to add CGST at the rate of 6%. 6% of 2,800, that comes to 168, and we would also add SGST at the rate of 6%, 168. So total that up, that would be the total value of the transaction. But here we are recording the payment part. So they have said the amount was paid by check. So the amount would come in the bank column. So we are going to write on the credit side April 4th as by purchases, the bank column 2,800, and the GST which is paid would be written on the same dates as by input CGST account 168 and by input SGST account 168. Is it clear to everybody? Very good. This was a transaction of purchase with trade discount and GST. This was an intrastate. Now next, on same date April 4th, there is one more purchase. Here goods was purchased for cash. The previous one was paid by check, so it came in bank column. But now this is going to be on the same date, 4th April. But this is purchase in cash, so we'll write by purchases account. Goods were purchased for 4,000. So purchase value will come in the cash column, 4,000. And then there is CGST and SGST. So this is also a case of intrastate. So on the same date, we will write by input CGST account and input SGST account. What is the GST? 6% of 4,240. So 240 CGST, 240 SGST in the cash column. Is that clear? Very good. Now going to the next transaction, April 5th. This is the same transaction. Let us look at that. Sold goods to Mohan 5,000 plus CGST, SGST at the rate of 6% each. This is a case of sale. This is not for payment being received. Here it was payment being made by check and payment being made by cash. So it came in cash book. But this transaction is a sale transaction, that was credit sale transaction with GST. So for this, we will prepare a journal entry. So go and prepare in the next page the journal format. Here. Prepare the journal format. Journal, date, particulars, ledger folio, debit rupees, credit rupees. So this is 2022 April 5th. So what is the normal transaction that we pass? We have already learned passing journal entry for sale. Who can tell me? You sold goods to Mohan and there is CGST and SGST. What would be the sale entry to Mohan, credit sale to Mohan? Only the sale entry. I'm not asking about GST. Without GST. When you sell goods to Mohan, what is the normal journal entry that we would pass? Yeah, sold goods to Mohan. Very good, correct. So here also we would have the same thing. Mohan account would be debited, being a debtor, to sales account. Only thing extra is going to be the CGST and SGST, which is being collected from Mohan. So that which is being collected is termed as output CGST account and output SGST account. So this would be the journal entry. Goods sold to Mohan, CGST and SGST at the rate of 6% each. So the amount of transaction was 5,000 of sales. So 6% of 5,000 will give us the GST of 300 rupees. So 300 is collected as output CGST and 300 collected as output SGST. Total which will be receivable from Mohan is 5,600. Clear, everybody? Very good. Always when you are passing the journal entries, don't forget to write the narration. Narration is the integral part of journal entries. Moving further to next transaction, April 6th. Received check from Rakesh 2,450, allowed him discount of 50. So here money is being received, how? In the form of check. So our bank balance would increase and discount has been given. But wait, they have said received check. Have we deposited on same day or not? That we have to verify. How can we verify that? See the next few transactions, whether they have given the deposit of that particular check received from Rakesh is available. As we see the next transaction only, they have said April 10th check received from Rakesh deposited into bank. Therefore, it means that the that this Tarun received from Rakesh a check. He kept it with him from 6th to 10th. On 10th, he went to the bank and deposited. So now we cannot put it in the cash book right now. On 6th, we will have to show it as check in hand. Therefore, we will pass a journal entry for that. April 6th, check in hand account debit. 2,450 per check is received and discount was given to him. So it is discount allowed account debit 50 rupees and it was related to amount due from Rakesh. So to Rakesh account 2,500. So this is for check received and discount allowed. Is this clear? Once this is done, we go to the next transaction which is on April 10th. Look at that. Check received from Rakesh deposited to bank. Now whenever we received it, it was on 6th of April. We had put it into check in hand because we did not deposit on the same day. Now this check we are going to go and deposit to bank. So now what happens? Your bank balance would increase on April 10th and this check in hand would be closed out by a credit. So the entry would be in our cash book. On the receipt side, we will write April 10th to check in hand and that would be in our bank column 2450. Is that clear? Well, the next one is on April 11th. Settle the account of Tej Printers 750 by paying cash 680. So what was amount due to Tej Printers which was supposed to be paid 750 rupees. But how much did we pay them? 680 and said we settled it. Means the rest of the amount we are taking as discount. So whatever is paid for that, the entry would come in the cash book. The discount which is being received will be recorded in the journal. So that particular transaction is going to get split up. So on April 11th, when we are paying the amount to Tej Printers, we are going to close out the credit to Tej Printers by debiting them. So it would be by Tej Printers account. We are paying by cash 680. So in the cash column. And 750 was the amount due. We have paid 680. 20 plus 50, 70 rupees is the discount that we are receiving in this transaction. So for that, we will pass the entry in the journal. So Tej Printers was debited with 680. Still 70 rupees left to the credit of Tej Printers, which is nullified through this transaction. On April 11th, we will pass the journal entry of Tej Printers account debit 70 to discount received account 70. Discount received. Is it clear? Others also, so far everything is clear. Any doubts? No. Rashish, what about you? No. Very good. Now moving on to the next transaction on April 12th. So look at that particular transaction. Cash received from Mohan 5,315 full settlement of his account. So there must be amount due to Mohan. So look at the previous transaction that we have recorded. If you see in the journal, yes, we have found out. This is the amount which was due from Mohan. What was received against this amount? For 5,600, we are receiving 5,350, which means a balance of 250 is going to be the discount allowed to him. So you know, for the amount received, it would be on the receipt side here. We would be writing on 12th to Mohan account. How is it received? Cash. So in the cash column, 5350. And for the discount part, we will pass the journal entry. It is discount allowed, so it's an expense which will be debited, and we will credit Mohan with 250. So passing that journal entry here, right here on 12th, it is discount allowed account debit to Mohan account. So 250. So we have credited in the cash book Mohan account with 5350 and here 250, which is nullifying the debit to Mohan in the first journal entry of 5,600. This way we have settled, we have received the amount and settled, closed out the Mohan account. Clear? Okay, good. The next transaction is on April 16th. An amount of 1,000 rupees due from Gupta brothers written off as bad debt in previous year now received. So in the previous year, amount was due from Gupta brothers 1,000 rupees. We found that it is a bad debt, we are not going to recover it. So what we did, we wrote it off as bad debt, put it to the debit or profit loss account. But this year what has happened? Gupta brothers came and paid that amount. So it is a bad debt which is recovered, which is a gain. So gain is credited to bad debt record account. And as nothing is specified, it means it is received in cash. Otherwise, they would have said by check. So it would come on the receipt side. On 16th of April, you will write to bad debts recovered account 1,000. Is that clear? Okay. The next transaction is on April 7th. Cash received from Murali on behalf of Manohar 200. So understand carefully. This is an interesting one. You have received cash from Murali. So cash is coming in cash account debit. But they have said it is received on behalf of Manohar. So Manohar is the person who was supposed to pay Tarun. Instead of that, Murali has paid. So obviously Manohar's account would be there in the books as debtor that he was supposed to pay the business. Now, although Murali has paid, Murali is a third party here. He is not involved. He is just paying on behalf of Manohar. So we have to nullify Manohar's account. Manohar being a debtor had a debit balance. Now that money is being received, although from Murali, For Tarun, he is receiving money, so cash account debit. And on whose behalf is receiving? On behalf of Manohar, whose account is there in the books. So it would be to Manohar account. So on the receipt side, we will write to Manohar account. You have to ignore that Murli part in the books of accounts. Clear? Got it? Any doubts? Very good. Everybody clear now? The next is on April 19th. Received a check for 800 from Mukesh, which is endorsed to Nitin. So what is happening here? Check is coming in. Mukesh had to pay some money to Tarun, so he gave a check. As soon as Tarun received it, what did he do? He gave it to Nitin. Why would he give it to Nitin? Because probably Tarun had to pay Nitin. So amount was receivable from Mukesh. So Mukesh was Tarun's debtor and Nitin was Tarun's creditor. So Tarun got a check from his debtor Mukesh, which he is giving to his creditor to settle the dues to Nitin. So here entry will not come in the cash book because check is coming in and getting handed over to the creditor. So the entry would come in the journal. We have to nullify the creditor Nitin. So we are settling his dues with debit Nitin our creditor. And we are receiving from the debtor Mukesh. So Mukesh is no longer supposed to pay. He has paid and settled. So we credit Mukesh. So Nitin account debit to Mukesh account would be the journal entry. Is it clear? Is it clear to everybody? Or shall I re-explain it? Clear. Rashi clear? Skanda clear? Okay, I'll re-explain. Now see. Tarun is the person who is doing the business, in whose books we are maintaining this particular transactions. Now, what happened was Tarun received a check from Mukesh. So, why would he receive a check from Mukesh? Probably he has sold something to Mukesh on credit and that amount is receivable from Mukesh. So, Mukesh is basically debtor for Tarun. Got this? And which is endorsed to Nitin. Who is Nitin for Tarun? Why would Tarun give the check to Nitin? He would give it to Nitin because probably some amount of 800 is payable to Nitin by Tarun. Well, so that means Nitin is his creditor. So in this transaction, what has happened is Mukesh, a debtor, gave a check to Tarun. So check was given like this. So it came into hands of Tarun. What he did? He gave it to Nitin, his creditor, to settle the amount which is due to Nitin by Tarun. So basically, Mukesh debtor has which balance? In the books, debtors are which balance? Debit balance. Correct. And Nitin, a creditor, would have a credit balance. So Mukesh giving a check, we have to close out. So we would credit him. And Nitin is also being settled by giving the check to Nitin, we are settling his dues. So credit has to be nullified by a debit. So that is what we have done here. Got it? Very good. Next we go to April 20th. Sale of old furniture for 700 plus CGST, SGST that was 6% each. Payment received in cash. So furniture sold. Furniture have debit balance. When it is sold, we are supposed to credit it. So money is coming in. They have said payment is received in cash. So cash account debit to furniture is a normal journal entry. In addition to that, there is GST here. GST is going to be collected from the customer. So there is going to be output CGST and output SGST being collected. So on April 20th, we are going to write cash account debit to furniture account. We are reducing the furniture balance by the amount of furniture which is being sold. You are receiving that much money. In addition to that, you are receiving on the same date, you are collecting from that particular person output CGST and output SGST, both at the rate of 6%. So what is 6% of 742? So the GST is 42 rupees each. So 42 and 40. Is that clear? Very good. Now going further. Next one is a simple one. April 25th, withdrawn from bank 3,000. Here no GST is involved. Simple. When you withdraw from bank, that money, where will it go? You go to the bank, withdraw money, you get that money cash. So where will it go? It goes into, correct. So cash would increase, na? Your bank balance would decrease. Very good. So here, what type of entry do we call such an entry where cash and bank both is involved? Do you recall? Very good. Correct. Excellent. So we are going to pass on April 25th the contra entry. Withdrawn from bank 3,000. So there is going to be 25th here and 25th here. Money is being withdrawn. Your bank balance will go down and cash balance would increase. So when it is increasing, it's on the debit side. So we'll write to bank account, contra here, and it is by cash account. Contra here. The entry is cash account debit to bank account. So cash balance increases. So in the cash column and the bank column, you have to reduce it. So you put it on the credit side. Clear? Then on April 25th, there is one more entry. Drew from bank for household expense 1,000 and for income tax 500. When amount is withdrawn for household expense and income tax of the proprietor, what do we call it as? Do you remember? Correct. Very good. So this is withdrawal for personal use. So we debit drawings and it is withdrawn from bank. Both for household expense and income tax of the proprietor is for personal use. So we will write on the credit side as by drawings account. In the bank column, 1,000 plus 500, 1,500. Then on April 28th, Surinder, who owed 400, became bankrupt and paid 60 paisa rupee. So there is one person, Surinder, who owed Tarun. Means he had to pay Tarun. This is the amount receivable from Surinder, 400. But he became bankrupt. So he is unable to pay his dues and paid 60 paisa rupee. He is able to pay for every 1 rupee only 60 paisa. So when 400 is the amount which is receivable, he will be able to pay only 60 paisa. It means he will be able to pay 240 rupees. So from Surinder, how much is going to be received? 240 rupees because he's become bankrupt. Got it? So this is being received 240. So on the receipt side, write 20 to Surinder. 240. Now out of 400, 240 is received. So what is the balance amount? 160 rupees. This is not receivable because he become bankrupt. He's not going to pay it. So this is nothing but a bad debt. So for bad debt, we would be passing a journal entry. Bad debt is a loss. So we will pass the journal entry on 28, bad debt account debit. We debit the bad debt account with the amount of loss of 160 and we close out Surinder account because we know we are not ever going to receive from him as it become bad debt. This is for bad debts recorded. Clear everybody? Very good. Rashish clear? Skanda clear? Or you want to be reexplained? Okay. Very good. The next transaction we have is on April 28th again. Here it is received repayment of loan advance to Ram 3000 and deposit out of it 2500 to bank. Now here we are going to split it up into two transactions because first we are going to receive the amount. This was towards a loan which was given to Ram. So it was amount receivable from Ram. So Ram was having a debit balance. We are receiving from him. And therefore cash is coming in, cash account debit to Ram account 3000. First we'll record that as received in our cash book. So here you write 28 to Ram account 3000 is received. Then for the second part is a deposit out of it 2500 to bank. So out of this 3000, 2500 we took it out and deposited into bank. So depositing money into bank again is a contra entry. So you're depositing money into bank means bank balance increases. So it would be bank account debit. So it would be by bank to cash account contra. So your bank balance would increase by 2500. Sorry, I put it in the wrong column. Here. And your cash balance would decrease by 2500. Got it? Is it clear? Okay, good. Okay. So the trick here in contra entry is like I was going to put in the wrong column. How did I realize? It is bank account here, so it should come in the cash column. And it's cash account here, so it should come in the bank column. If you observe that, it's cash account here, it comes in the bank column. Bank account here comes in the cash column. So that way you can avoid making mistake of putting into the wrong column. Okay. The next transaction is on April 30th. Interest on overdraft debited by bank 375. So we saw that bank had overdraft balance. So which means Tarun has drawn more than what he had. So obviously he will have to pay interest on the amount he has overdrawn. And the bank has charged 375 interest. So what would happen? It is an expense. So interest would be debited and bank would be credited. So on 30th, you would write by interest account amount of 375 in the bank column. Clear? The last one is deposited with bank the balance amount after retaining 2000 cash in hand. So now what we are supposed to do is we have to ensure that our closing balance of cash is 2000. They are saying Tarun decided that in his pocket or in his safe box he is going to keep 2000 cash. Whatever extra cash he has, he will deposit into bank. So from that, what you understand, we have to pass one entry for depositing money into bank. So there's going to be a contra entry. Bank account debit to cash. A contra entry like this. And then we would be having the balance. By balance, carry down. Carry down cash, we know 2000. For the bank, we would ascertain. Okay? Getting it? What we're doing? So, first what you're supposed to do is take the total of the debit side of cash. So, look here. How many transactions do we have here? Starting from here, total it up 1200 plus 4000 plus 5350 plus 1000 plus 200 plus 700 plus 84 plus 6400 here. So the total of that comes to 18,774. That we would write on this side. And now we are retaining 2000 and we have these items of outflow. So subtract all this from 18,774. The total is how much? 4,000 plus 480. That is 240 plus 240 plus 680 plus 2,500 plus the 2,000 balance that is to be maintained. It comes to 9,660. So from 18,774 we will remove off this 18,774. That gives us 9,114. This is the amount of cash which we are depositing into bank. Are you all following? So the contra entry that I said we are going to pass is for 9,114. So bank account in cash column, cash account in bank. After doing that, now you find the total of the bank column and see which side the balance is there. It can be on either side. For bank there can be a favorable balance or a overdraft. So better total both sides and see which side total is more and write the balance. So here it is 16, 18, 450. 18,450 plus 2,500, 20,950 plus 9,114. It comes to 30,064. And if you see here, this one is much lesser. So it is debit side only is more. So 30,064. From that, we'll subtract these amounts that we have. That is, subtract 15,000, 2,800 minus 168 minus 168 minus 3000 minus 1500 minus 375. That leaves us with a balance of 7053. So the closing balance also came here. Our overdraft has changed into a favorable balance of 7053. Got it? So now May 1st we will have to balance brought down of 2000 of cash and 7053 of bank balance, favorable bank balance. Everybody clear now? Any doubts? Very good. Others also clear? Please let me know. Very good. So this is how under GST preparation of cash book we prepare it. It is on the same lines as cash book, but additional items what we have is the input CGST, GST which is being paid, which will come on the payment side, and we would have the output CGST and GST on the receipt side when it is being collected, which you have to remember.